Good weekend to all. This is Mr. Intermarket Analysis covering the FTSE 100. I'm just going to look at multiple time frames today and see exactly where this index is headed. Obviously, given the fact that Shanghai and Nikkei were down quite heavily over the Thursday and Friday, adding the fact that the currency pairs, especially the Aussie, has been hammered as of late, and the Aussie and the FTSE, as we know, are both commodity related, therefore have a very positive correlation, but yet the FTSE is diverging, and not only is it diverging from the Aussie, it's also diverging from oil. The oil and FTSE, if you map a chart versus the two, you'll find that there's a positive correlation there as well. The oil tends to go lower. For a $1 drop in oil usually shaves around 20-30 points of the FTSE. Same with copper as well. It's been diving, along with gold is the only commodity that's been going higher, and that's been mainly due to concerns, obviously, whether it be geopolitical, socio-economic. Right now, obviously, with the American debt ceiling debacle, and we have some inflation now starting to rise in China and in certain parts of Europe as well. So there's a socio-economic play there, to be honest, on gold. But having said that, FTSE should still obviously come into some type of resistance. But yet, the divergence, like again, from the Asian markets and also the American markets as well, because they're high on the Kool-Aid. It's all about QE right now. Bernanke has your back, Yellen has your back. Just buy every day. Now that's not a trading strategy, which I've been ranting and raving on Twitter for quite some time now. So if you ever want to follow me on Twitter, I'm on my Twitter handle is traderadil at inter-market-analysis.com. Also, come and visit me on my website. My website address is inter-market-analysis.com. I post all my charts on there. I've got a live analysis service where I share my trades in real time. I have a mentoring program where I can educate you in the school of intermarket analysis. So certainly come on board. I have a 1-week trial on the live analysis service as well. Obviously, you come on board and observe me trade and learn to trade in real time. That's the ultimate way of learning from my perspective. Okay, so let's get back to the FTSE 100. So on the weekly chart here, we had some type of a symmetrical wedge pattern here. Obviously, I did expect, certainly for myself, I did expect to move lower and to test this key trend line here, which we've been testing for some time. But even the lower trend line, we did have a spike. I think that was due to Yellen, as soon as she got nominated, and the fact that the taper would be delayed. Obviously, the QE junkies came back in and brought this market right back higher, even though commodities such as copper and gold are coming under pressure. So there is a contradiction there, because if QE is a cheap dollar policy, obviously that should then help oil move higher, inflate oil higher. And if it is going to revive growth, then why isn't copper moving higher? So there's definitely contradiction in terms there. I mean, I can bring up a chart of oil quickly, although I am diverging from the FTSE. As you can see here, H&S formation, which I called for. I did call for a target of 97.5. You can see my previous analysis on my website, and obviously we've hit that. Okay, I did call for a breakdown of the copper index on the downside as well. Again, you can see that on my chart. We have had a fake out, and we are still within that symmetrical wedge pattern. So bear in mind, you do have an inverted head and shoulders, but we need growth, and there is no growth right now. Obviously, all the economic data that's come out this week out of America and Germany and Europe, with the exception being Britain. Okay. And the UK, the British Isles, they're obviously doing pretty well in terms of economic growth and powering ahead. But again, there's more concerns there for the FTSE. If you have economic growth higher than expected or in line, therefore you don't need the Kool-Aid. Therefore, stock markets generally tend to go lower because the QE junkies are no longer biting the carrot or eating the carrot. So it's a tricky one. Okay, well, let's just go back to the FTSE 100 again. So weekly chart. Again, symmetrical wedge breakout. We are into resistance now, so 6720, 6730 must be respected. If you go back historically as well, that's exactly where the market had a crash and the credit crisis kicked in. Okay, credit crunch, tuna crunch, call it what you want, whatever crunch you want. Eventually, we sold off quite substantially. So this level here around the 6730 is going to be a psychological resistance level, and it's going to be very hard to penetrate. We do need a potential gap higher, so if you get a gap higher above that on Monday, then you should just be gap and run, and the market should sustain itself higher. So again, we take every day as it comes. I'm a day trader. I have certain swing trades in place, mainly on commodities and obviously risk FX. But with regards to indices, I prefer to day trade because they don't manipulate. There's a lot of manipulation going on in the indices right now, especially the Yanks. They just want to, and their Argos and HFTs are trying to spike out everybody in terms of on the short side. So again, anyway, so with regards to this resistance, again, respect that. Okay, 6800 as again resistance, and the ultimate resistance is 6880. Okay, so weekly chart certainly argue it is bullish on the basis that we've broken out the wedge pattern. You have confirmed growth from the UK this week, which, to be honest with you, I was quite surprised given the strength of the economic data that came through. Okay, and Mr. Carney's policy as well, obviously is obviously coming into fruition. So let's go to our next daily chart now. So daily chart of the FTSE 100. Okay, so we've broken the previous resistance level, which was around 696. We've obviously closed twice above that now, although it is a doji, so it could be a potential fake out, so we keep an eye on that. Okay, I'll just draw a resistance line there, so the market does come back. 6660 will be a key support level on the downside if we do come back and reverse. Alternatively, 6760 is inevitable given the resistance here, and then the next level is 6840. Okay, given the fact that global markets are high on QE, okay, Yanks sneeze, we catch pneumonia, we could continue to sustain our move higher, especially the fact that now copper and oil are into support, and when copper and oil were falling, the FTSE was rising. Now when copper and oil will rise, therefore the FTSE may well rise as well. So again, the divergence is there, negative divergence, but on this occasion it could be positive divergence, so something that we need to keep an eye out for. Okay, now given regards to commodities, obviously they move inverse to the US dollar, so the fact that the US dollar itself has been obviously holding some type of support here on the weekly chart. Okay, so again, we just keep an eye on this, take it each time as it comes. Obviously we have broken on the daily, but on the weekly we are holding some type of support. But if you do break and go down to the 77 level, then that will obviously help copper and oil to move higher because they move inverse to the dollar. And given the fact that the FTSE is a commodity index, obviously high on the Kool-Aid and a cheap dollar policy, that could obviously sustain gold, copper, oil higher, which in turn could take FTSE and the S&P and all global markets higher as well. So there's a lot of conundrums there. Okay, so again, a lot of subtleties from intermarket analysis perspective, which I go through with my students. I have a live trading room now where I try and give as much commentary, etc. as possible. Again, it's on my website, inter-market-analysis.com. So come there. I'm going to be spending a lot of time trying to give commentary throughout the day, okay, and help individual traders like yourselves out there that are trying to grasp and understand what's happening with regards to these markets. Strong economic data means stock market should go higher based on the economics degree that I've acquired, but it's the opposite right now. So a lot of people out there are scratching their heads. Why? Because it's all about cheap money. That's all it is. Okay, so they've got nowhere else to put all that freshly printed greenback other than equities right now at the moment. Okay, so let's go back to the FTSE 100 60-minute chart. I've already discussed this setup on Monday, which really failed to transpire, to be honest, and I had to cut my FTSE short -5 in the end and sort of bail out on this trade just due to price, pattern and time, which I've been taught by inthemoneystocks.com, Gareth and Nicholas. Something that we really need to focus on, price, pattern and time. If time takes too long for a particular pattern to materialize, therefore you should bail and close a position, because as they always say, never short a dull market. Why? Because Mr. Bernanke will more than likely squeeze you out. Okay, given his obviously, we all call him helicopter Ben for a reason. So now on this occasion here, you've got a double top resistance. We have broken this trend line on the downside, although we are coming back up now. Again, it's all about our double top. If we exceed the double top, which is at 6720, bulls are in full control. Okay, watch out for the bull. Don't be wearing a red jacket, otherwise they'll come running towards you. Okay, alternatively, if we hold that resistance level, we break south, then obviously 6660 is the first testing zone for support, and obviously you've got gap fill below at around the 6575 level. So keep an eye on that. Now the 10-minute chart, okay, 10-minute chart is more interesting. Obviously you've got a bullish channel here, which has been obedient so far. We are testing a lower channel at present, okay. Now the more interesting thing from my perspective is the fact that we've actually got a H&S formation brewing here, provided the right shoulder remains and stays below, and the downside target on that, so 6731 minus 6711, which is the neckline, gives me a projected target of 6691, which again is a 200 MA. Also, you've got the gap fill support, the gap level that we rallied from from the Wednesday through to Thursday morning, is 6670 level. So get potential unfilled gap there that needs to close as well. So that's another projected zone on the downside. So again, we take Monday as it comes, see what the Asian markets do. If the Asian markets continued weakness there, sustained weakness there, then unfortunately, well, not unfortunately, who cares whether we're bull or bear? The market goes down, okay, either way. So that's something that you need to keep an eye out for. So I think I'll wrap it up there, folks. Always remember, which I tell my students, risk on, risk off, wax on, wax off. Goodbye now.